Welcome back. Let's catch you up on a couple stories that should be on your radar. It's time for Rapid Fire, and here to break down today's headlines are Dom Chu, Bill Griffith, and Robert Frank. Welcome, everybody.
First Are we tasting any foods?
No tasting.
No taste test.
Looks pretty clean over
I'm
here
out.
right now.
No BYOBs. We're keeping it real today. Apple is surging on news that the White House is delaying the 10% China tariffs until December. Apple today on pace for its best day since May. Wedbush saying it removes a dark cloud hanging over the tech giant as it heads into a major iPhone upgrade cycle. Apple had previously warned the next round of tariffs would directly impact all its major products produced in China.
First of all, I would invite everybody to go to ustr.gov. They have both lists. Those that are being delayed until the 15th, that's 21 pages.
I was going to say.
Those that are going still to be imposed on September 1st, that's 122 pages.
Wow.
Now, to my untrained eye, some of these things look the same as those that are being delayed in terms of clothing items, technology items. My favorite one that's being delayed until December 15th, by the way, magic tricks and practical joke items, which I'm relieved to see.
I have to say, the top level list that the trade rep group put out was that it includes cell phones, video game consoles, clothing and shoes, and certain toys. It reads like your Christmas shopping list.
But anyway, there's still plenty of those kinds of items on the September 1st list as well. But yes, Apple is definitely going to benefit.
Lots of apparel, though. Lots of apparel is still on the list, by the way.
For September 1st.
For September,
yes,
yeah, exactly.
Yes.
A lot of food items, which I don't think we import that much of from China, but you never really know.
Well,
I mean, there's things like livestock on there. There's like milk items, that sort of thing. But it really does read like a laundry list, so to speak.
But the point you raise is interesting because it says, okay, so Apple's knee-jerk reaction was a 5% gain on the news. Even there, we're not sure if all of their products would be excluded or if it's just the iPhone. I mean, there are other products like the AirPods and different things that they make. There's still question marks about, which applies to the rest of this list that people are looking at.
Well, you know, that analyst saying it removes a cloud, I think it's a one-day umbrella or maybe a 20-day umbrella, because we just see from today how fast-changing and capricious the whole lists are and the dates, and this could change again next week.
What I thought was an interesting acknowledgement today, though, was President Trump standing before reporters saying that the reason why he did this was to help protect the American consumer around the holiday season.
We don't pay the tariffs.
Which is what I'm trying to. The point is, we apparently didn't pay the tariffs before, but now it's an acknowledgement from the administration that consumers do bear some of the brunt of that particular move.
And I think part of the magnitude of the rally we're seeing in the stock market today is also an acknowledgement that this is something of a softening of the stance.
Oh, sure.
It's not just the list per se, it's what the list symbolizes right now.
Especially by the U.S. I mean, I'm not sure we got in return for this, other than an acknowledgement that it was going to be some harm. All right, meantime, hedge fund Third Point is disclosing it raised its stake in Netflix by 25% in the second quarter, so that's ending June. They hold about 500,000 shares of the streaming giant, according to their 13F filing with the SEC. By the way, we're still waiting, meanwhile, on the expected CBS-Viacom merger news. Big question for Netflix is how it deals with all of this consolidation and new competition. Third Point stake came before Netflix had that disappointing quarter, and everyone got more excited about Disney+. The shares have been a little bit more rocky lately.
Well, I mean, Netflix as a stock overall has not been participating nearly as much as the market writ large, especially with regard to mega cap or large cap media and technology names out there. It's curious that Third Point would up its stake there because it does represent a little bit more of a bet than, say, other more conventional trades with regard to mega cap technology. It's been beaten up pretty bad because it is in an increasingly hyper-competitive space for streaming media. They also bumped up their stake in Microsoft. Nobody really talks about that because Microsoft seems like a consensus trade at this point with mega cap tech. So the Netflix thing is very curious, but it is competitive, and it will be a bet on whether they can survive this.
Yeah, I just wonder if at some point we drop Netflix out of FANG or bring in Microsoft, or we have to adjust the acronym somewhat. But I think now with Disney Plus coming, there's more questions than ever about whether they're going to remain the only game in town.
Many other pluses coming as well.
Yeah, exactly. Then there's a new column from The Verge calling for an end to trending topics on Twitter, which is one of the most important things the platform does. The argument is it would deny bad actors an avenue for delivering hoaxes and conspiracy theories the rest of us click on in the newsfeed. But it does raise the question, would it come at the expense of editorial neutrality? Same issue Facebook and every other gatekeeper is now grappling with.
There is nothing wrong with trending per se. It's the monitoring of trending that is woefully needed by Twitter. This is another example of a company that's losing control of its product. We've talked about this with Facebook as well, with some of the posts that have been put there. It's like getting rid of the front page of a newspaper. What's the top news? What's going on? You want to be able to see on your dashboard what's happening, what's everybody talking about right now, and then be able to move in that direction. It's not the problem with the trending, it's how Twitter monitors the trending.
But one of the unique innovations of social media was this ability to say, hey, you guys can all see what everybody else is talking about. It wasn't, some boring Wall Street Journal editor picked this for you, and I say that with all due respect. It was, hey, this is the water cooler conversation, and you can see what. And now, if they're acknowledging that that's broken, I wonder what that means in terms of what we go to them for.
Well, to Bill's point, I think the answer is pretty simple. I mean, we all benefit from what's trending on Twitter. We all I discover things. Oh, I didn't know this person, this singer just had a divorce already. But I do think it is easy. There are times
to know.
There are times when there's somebody trending or a topic or a conspiracy theory that's blatantly false, that's being promoted by someone's algorithm, that some editor could just say, well, this is false, just take it down. I don't see why it does require some additional staff and apolitical ability to do that.
I think it's tough because not all of the topics, conspiracy theory-wise, Dom, are that cut and dry. I mean,
they're not, and you're still asking for an arbiter of what's right and what's wrong, what's trending and what's not trending. The numbers should speak for themselves, but just the idea that you could have
the anti-vaccine folks, the Alex Jones folks, like those things, I think everyone agrees could have been taken down.
But there's still a lot of gray space.
Yeah,
and
absolutely.
I wonder how many more human editors and staffers.
But media companies, to your point about the Wall Street Journal, they all deal with those gray spaces every day. That's what they're paid for.
By the way, very well. Finally, Vanguard says it's removing 29 stocks that were erroneously added to 2 of its ethical ETFs. Among these names are gunmaker Sturm Ruger, pharma company Glaxo, and private prison operator Geo Group. Vanguard didn't disclose which criteria these stocks failed to meet, but the firm apologized for the error and cited an issue in the screening used by its benchmark provider, FTSE Russell. What do you guys make of this one?
Go back and see what we just said about trending on Twitter.
Yeah, algorithms.
Monitoring it properly and setting up those algorithms there. This is a big oops. What this is all. Come on. They made a mistake. And
I think there's a lot of questions people should be asking about all of these ethical ETFs.
Absolutely.
Well, exactly. We've talked about this ad nauseum. It's a very subjective thing when you're talking about ethically imposed mutual funds out there.
Whose ethics according to what?
But the error itself shows you that it's not just subjective, right? Yeah. They've put a rules-based effort in place to look at certain screening is by definition
subjectively developed.
Sure, but there are still rules by which things have to funnel through and pass these screens. So they acknowledge the error, but this is the idea of quantitative investing means you have to identify keywords or phrases or ideas or certain terms and phrases that actually get you to invest in these things.
I think it won't be long before we have red ETFs and blue ETFs.
Politically?
Yes.
I think there are.
When we have in our surveys, when we look at our surveys, and Steve Leisman found this too, people's attitude toward their investments is shaped almost entirely now on their political affiliation. And I think to the point of this, Murdoch papers being taken out of this, I think there are investors who would say, I want that in, and I don't want some other broadcaster in my ESG. But so I think red and blue could be developed if they're not already.
I think they already are,
Yeah, if those tickers aren't taken, someone grab them now.
By the way, that is a lovely green tie.
I was apolitical today. Bull market tie.
Thank you all. Dom Chu, Bill Griffith, and Robert Frank.